Kungo, head of Asia Research, ANZ Research, also joins us on the show this morning. Thank you so much for taking time out and joining us this morning. First things first, this puts into question a lot of things that the market was already pricing in. So what is the immediate impact that you're penciling in from the 150-day 15% baseline tariff on all imports to US at this point?
Well, at this stage, markets are clearly uncertain about the path going forward. But what is clear is that the US dollar is getting sold down as US policy uncertainty continues to escalate. And whilst markets so far, particularly in Asia, has taken the new tariff of 15% in its stride, I think it's fair to say this is, again, one of President Trump's ongoing threats to try and ensure that the framework agreements that have been agreed can be pushed through to the finishing line. So at this stage, I would read President Trump's imposition of the 15% global tax as merely a threat. We know that it is only a temporary measure and probably will be subject to challenge as well. So in this point in time, I think it's fair to say there's more questions that remain unanswered at this stage.
Absolutely. Bunch of questions that remain unanswered at this point in time. But when you talk about India specifically as well, there's a case for New Delhi to also re-examine the interim deal. In any case, there's a lot more uncertainty on the table, just like you've pointed out, than there perhaps was before. So against this backdrop, then, how are you looking at India, both individually and also in terms of how it's placed within the emerging markets basket?
Well, I think this is an opportunity for the various trading partners, including India, to relook at the framework agreement that had been reached earlier. Now, there is, of course, a danger in that countries that try to reopen the negotiations could see the Trump administration come back with other types of coercion. Now, although the Supreme Court has ruled that the administration can't use the IEEPA to impose tariffs, there are other statutes that the administration could utilize. And there are various other measures that the Trump administration could use to try and, if you like, bully the trading partners into signing up and agreeing to the framework agreements. So at this stage, I think we are in a period of uncertainty. I think each country will be looking at one another to see, how each will react and respond. But I think for now, it looks like we are pretty much back on the negotiating table once again as the various countries try to secure a better deal for their side.
Absolutely. We are definitely back to the negotiating table when you talk about a lot of these deals that were brokered previously. But now that there's a lot more uncertainty, when do you also expect the dust to settle when it comes to the markets? Is there anything that you're penciling in on that front as well?
Look, to be honest with you, I think the world has pretty much accepted the tariffs that President Trump has imposed. Now, the SCOTUS ruling has brought back the uncertainty, but I do believe that we are probably past the peak tariff level. I think going forward, if any final agreements are to be reached, we'll probably end up with a lower overall tariff level than what we previously ended up with at the end of last year. So I think from that point of view, that's probably positive. I think most companies have already learned to get around the tariffs and shifted supply chains. So whilst we're in a period of uncertainty, I don't think this will necessarily upend the global trading system.
Absolutely. And, when you talk about sectors that also focus on exports like IT, pharma, as well as textiles and auto, they may also, react sharply. So where do you see cracks emerging with all of the recent news flow? And historically, tariff escalations seem to have led to a little bit of a knee-jerk volatility followed by selective buying. So are you expecting a similar playbook this time, or any sort of sectors that stand out to you and make it to your radar as well?
Well, at this stage, like I said, I think markets have really taken it in its stride, and that's because a lot of the current exemptions, for example, for semiconductors and pharmaceuticals, as you pointed out, remain in place. This global tariff of 15% does not apply to those sectors. I think going forward, what will be interesting would be how the Trump administration decides to use the other section, for example, Section 232, the sectoral tariffs, whether or not they, go further into those to really try and prosecute the administration's tariffs. But like I said, I think at this stage, we are likely to see tariff levels, if anything, potentially go lower as a result of the SCOTUS ruling. The 15% global tariff that President Trump has recently put in place is temporary. We do not expect that to last for too long. I believe that the Trump administration will use this current window to further negotiate and secure those framework agreements before those tariff levels start to come off.
No, absolutely. And, there are a lot more questions that remain unanswered than other ones that are answered. But thank you so much for taking time out and joining us this morning.